Thanks again for joining us here on a Thursday. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, what an adventurous day in the grain trade today. They have been having big, wide trading swings all week long, and today is no different. Let's take a look at what the corn market is doing now with our quotes provided by Bar Chart. And on the corn, we are hanging on to some strong gains today, and it's actually led by the deferred contracts. That's a little interesting. The July, well, it's no slouch either. We have July 10 3/4 higher at 618.5, and that's within a penny of our high of the day. December gaining 16.5 cents now at 565 3/4. Now, if you look at soybeans, well, they're kind of rocketing higher. You have July up 32 1/4. That's right, I said higher by 32 1/4. 1420.5 is the last trade. And for good measure, you have November 34 cents higher today at 12.74 even, within 2.5 cents of its high of the day. Gee, you think we're in a weather market? Let's take a look at the wheat. In Chicago, July 15.5 higher at 645 3/4. Is it trading on its own or riding on the coattails of the corn and beans? Kansas City wheat, you have July 15 1/4 higher. Well, look at that. It's over $8 now at 8.01 per bushel. Well, that's only one tick from our high of the day now. And spring wheat trade, Minneapolis, 14 1/4 higher at 823.5. And let's check out the cotton market. There is your cold water. You have July down 56 points at 81.23, and December down 64. It's at 79.47 per pound. Let's bring in Ted Seifried of Zaner Ag Hedge in Chicago. So the cotton is kind of the only fly in the ointment here so far today, Ted. Otherwise, the grains are kind of flying high. But should producers get very complacent about watching the market go up like this, or is it time to do some action?
I mean, that's a great question. That's what we're all asking ourselves. And yes, a lot of green on the screen today. It looks good. Now, that being said, you know, this is a weather market. It can change at any minute. If we were to get some rains, if that forecast gets wetter, yeah, you know, it's still early enough in the growing season where this crop can come back in a fairly big way. Now, maybe we're not going to hit the top end of the trend line yield or do better, although I'm not going to rule that completely out yet. Because again, go back to 92, we had a somewhat similar situation. We ended up above trend line. But you have to understand that we are getting into some prices that, you know, just a month and a half ago, we wished we would see again. So here we are. And I don't think you should be complacent. Not at all. I also understand that, hey, listen, we're not 100% sure of the crop that we're going to have because of the drought monitor that we have and the weather forecast that we have right now. So it's important to understand that there are other tools to be used here, you know, put options or HTAs, things like that. So yes, you have to be careful with your marketing. You have to take the opportunities when they come along like they are now. But also you got to try to leave some room to the upside, right? I mean, if this just keeps going, you do want to participate in that. So again, how you structure this and how you approach it is very important. I will say this, you know, as you pointed out, this is all being led by new crop. This is December corn and November beans leading the way, which is a reflection of the new drought monitor that we just saw, showing a whole bunch of pretty pictures or pretty colors on it. Not colors that we like to see, but definitely colors across that drought monitor. And the forecast not looking all that great. On top of all that, you've got risk on from the non-rate hike that we saw yesterday. So a lot of bullish things happening in the market today. At any given point, that weather market changes, that longer term forecast changes, that could have a profound effect on like what we're doing here. So just keep that in mind.
And also we have a 3-day holiday weekend coming up, and I was trying to think through how many different changes in weather models we will have over the course of 3 days. What is that, like 18 potential changes, something like that, over a 3-day period? Things could look totally different when we come back next Tuesday. So it could be a fascinating time, an interesting time of year. Ted will come back in a moment, and I want to get your thoughts on the livestock trade. A big collapse in the cattle market this week. What happened? We'll talk about it next. All right, well, the intrigue in the markets continues. Now let's switch gears and take a look at our livestock trade. This is one wild ride. Of course, we talk a lot about rodeos on this and our sister networks. Well, if you like rodeos, you'll love the livestock market this week. My goodness. Let's look at live cattle prices. Our quotes are provided by Bar Chart, of course. And, well, of course, we had the huge up day on Tuesday, a big down, a reversal down yesterday. And now we have downward prices here again this morning. We have the August live cattle now 22 lower at 170.75. But you know what? it has bounced $1 off of its earlier low this morning, and now we're getting closer to the high of the day. Okay, just about wears you out. It was about $1.30 lower there at one point, and now we're almost back to unchanged again. October down 37. Now, if you look at the feeder cattle market, this is the one that was over $4 lower across the board on the close yesterday. Today, we're over $2 lower on the first 4 months. And August down $2.52 at $2.33.32. That sounds terrible, but it's off of its low a little bit ago by over $1 now. So it's starting to rebound again, kind of reminiscent of a couple of days ago. Now let's take a look at lean hogs. They are higher. August up $1.65 at $91.32. We're 30 cents from our high of the day. And October up 65 at 80.52. The nearbys are leading the charge higher in the hogs, and usually that's a bullish signal. Let's go back to Ted Seifried. On the cattle, they are coming back off of their lows from earlier this morning, somewhat. They're still lower on the day. But do you think this is still just a correction in a big up move, or have we made the top? What do you think?
You know, from a fundamental standpoint, the concern is growing that we're going to stop being as aggressive, paying the higher prices at the butcher's counter for the high-priced beef. We might start looking to other alternatives, i.e. pork, part of the reason why hogs have been strong. But really, that's the only thing fundamentally that's kind of changed. Aside from that, cash cattle is still strong. Boxed beef prices have been on fire. They're the highest they've been since when we were having the COVID lockdowns at all the packing plants, and we just weren't getting the production. Feeders had a break because corn is strong, and we see this growing drought monitoring concern. We know feedstocks are getting expensive. We know that pasture is getting harder and harder to find. That's a concern for feeder cattle, and feeder cattle have been the leaders on this break. But for the most part, I think this is a technical correction in nature for the live cattle. We're still operating under that reversal lower that we had a week ago last Wednesday, on the 7th. And today we went down and we hit our 20-day moving average. And we bounced off of that. This is a market. This is a mature bull market that is trading like it. I think we're going to go back and test those highs again. I don't think there's enough to say that this is over with.
Interesting stuff. All right. Well, thanks for the observations on that. Good technical points you make there. Ted, I appreciate that. We'll let you go for now. Ted Seifried of Zaner Ag Hedge with us from Chicago this morning.